investor. Let me move on now to the lead story this evening. Edtechs have been in focus after Byju reported massive losses, and we covered that story for you yesterday. We gave you the details, but just to set the context for our discussion this evening, Byju's reported losses of over 4,500 crores in FY21. This is 17 times what they reported in the previous year at 260 crores, so a massive jump. Revenues have been reported at 2,280 crore rupees. Now, the revenues are also below the estimates and the guidance, the targets of the company itself. But what's important is over 1,000 crore rupees of revenue was actually removed from the books. The FY21 numbers were put out after an 18-month delay because the auditor to the firm, Deloitte, had an issue with the way the company was reporting its numbers. And after 18 months of a back and forth, they finally came to this conclusion that a lot of the revenue that Byju's was adding onto its books shouldn't have been there. And I'll just give you two examples. One of those examples is that when they had subscriptions, say for a 2-year package from a customer, Byju's was adding that in the same year. What Deloitte wanted was that this should be split over 2 years because this revenue is for 2 years. Secondly, interest payments that Byju's was making on loans their customers were taking was also removed from their revenue calculation, and that's why we have these numbers. Now, a number of questions come into play, including on corporate governance. Shriram Subramanian, founder and MD InGovern Research, is joining us for more perspective on this. Mr. Subramanian, thank you for speaking with us. What are the big red flags you see from what Byju's has reported now?
Thank you for having me on this show, Tamanna. I mean, the red flags by itself, I mean, well reported, Deloitte has pointed out, media has pointed out, etc. See, the fact is that these are not Deloitte pointing out. These are age-old accounting standards which have been there so that reporting is fair to across all companies, and investors and the other stakeholders see all companies equally, all financial statements from the same lens. That is the reason accounting standards are there. So Deloitte is just applying Ind AS, the Ind accounting standards, to the Byju's books. So Byju's or any other company for that matter can hope to have its own revenue numbers, its own expense numbers, etc. But at the end of the day, that was the red flag. The fact is that Byju's has had unriddled growth, and that seems to have, without adequate processes in place, without adequate resources and systems in place, and obviously their valuations mattered. Only valuation seems to have mattered.
Shriram, it's also an important question because as all of the startup boom is coming to the fore and you have massive amounts of funding for new age companies, Byju's, remember, has reported these numbers for a year, a pandemic year in which they did very, very well. In terms of there was an actual massive growing need for their product and for their services. But does this also give an insight into how some of the growth reported by these companies which are not in the public listed space really needs to be looked at more carefully?
Yes, I think valuations trumped values, so to say. Be it investors, be it media, be it other stakeholders, placed a lot of importance on valuations. So there were headline numbers, valuations were headline numbers. But what was the company actually delivering? Did the company have good business practices? Did the company cater to the needs of all stakeholders? Be it food delivery. Say, there are so many complaints from all the stakeholders, be it hotel management. All the hotels are complaining against the hotel aggregator. Be it Edtech. If students and mis-selling is happening, they are complaining. Be it fintechs. So even the borrowers are complaining. So this valuation seems to have had trumped over even the core business processes, so to say. So at the end of the day, these companies should be sort of now increasingly seen from what is the value they are adding to society at large, whether these companies are going to be sustainable, whether you are going to see many of these names 10 years down the line, whether they would have created jobs for everyone, whether they would take all stakeholders along with them. So those are the metrics on which we as external people, you as media, should be viewing these companies.
So much, Shriram, for coming in and explaining the context of that very important story. Pleasure as always to have you on the show.